Buying a home in Utah isn't what it used to be. One wrong move in today's market, especially with the new rules, could cost you thousands. Most buyers have no idea what they're walking into until it's too late. I'm Scott Walters, your Utah YouTubing realtor. I'm a Utah real estate broker and a former mortgage loan officer. I've been in the real estate industry since 1993, and in that time I've helped a lot of people buy real estate and navigate the Utah real estate market. On today's video, I'm going to share with you the home buying process. We'll talk about pre-approval, selecting agents, home searches, making offers, negotiating inspections and repairs, how much earnest money to put down. We'll go all the way down to the closing table. I'm going to share with you some real life stories of some clients that avoided costly mistakes and some who didn't. So if you want to buy with confidence and avoid losing time, money, or even the house that you love,
I love this house!
This video is your first step. There's a lot of paperwork when it comes to making an offer on a home here in Utah. Now, I've printed off just some of the paperwork. Of course, now we can do it all digitally. But before we even get to the process of writing up the offer, the first thing that you really need to do is you need to understand how much you can buy. That's why it's so important that you get pre-approved with a lender before even going out and starting your home search. Now, let's just talk about that. Sometimes you hear people, and you can even go online, type in just a few numbers on some of the big mortgage websites, and they'll shoot you back what's called a pre-qualification, which is great because that can give you kind of a rough estimate of how much of a home that you can purchase, how much of a house payment you can afford. But really the biggest, strongest thing is a pre-approval. The difference between the two is those when someone does a pre-qualification, they're just taking your word for what you say, how much you make and what your debts are, and they say based on that, this is how much you can make, without even checking your credit, because that's a real big part of getting a loan. You got to have good credit if you want to get the best interest rates. So the pre-qualification doesn't check your credit. It doesn't verify your income to make sure that what you're saying is really how much money you make. Sometimes you may not be able to use all the income that you make in order to qualify. So that's why you want to actually get a pre-approval. In that case, the loan officer will take a loan application with you. So they're going to get all your income and your outgo, and then they're going to get permission from you to pull your credit report so they can see what your credit report's at. They're going to verify your income with your W-2s, or if you're self-employed, with 1099s, and they're going to calculate how much money you actually make. And with that, they will be able to qualify you and let you know how much of a home that you can qualify to buy. You know, there's different rules on how much your debt to income ratios can be, and I'm going to leave that to the loan officers to explain that to you. But they don't want your payment to be more than a certain amount of your take-home pay, so you don't get in a financial bind. Now, there's some loans where they'll kind of push those parameters and limits and allow you to make your house payment be a larger portion than what they normally like. But generally that's going to come if you have really extra good credit, or maybe a lot of extra money to put down. The different types of loans that you want to consider looking at: you've got the conventional type loans, where generally you're going to be putting a 5% payment down on the home in order to qualify for a conventional. You've got VA, which in cases you can actually get a zero down loan. So that's also a nice benefit. Or you've got an FHA loan, which is a 3.5% down payment. One of my personal favorites, if you're in an area that qualifies for this, is a USDA, which is a rural housing loan. That is also a zero down payment loan. So if you're in one of those zones, and you can go to the USDA website and click in there and make sure that the area that you're buying in is included in that USDA area, then you could potentially get a zero down loan. There's income limits and qualifications there. You can't make over a certain amount of money and still qualify for that USDA. So if you're a high income earner, you're probably not going to get a USDA home loan, even if the home you're buying is in one of those zones. There's also other types of purchasing a home. You can also do seller finance, where basically the home seller is the lender. So you're making payments to them, and you want to make sure that it's set up with an escrow company such that you're making the payment to the escrow company, who then pays the lender, and then they pay whatever's left over to the seller of the home. Because if you don't, the seller could just take that money, not make the payments to the lender, and then next thing you know, you're getting a foreclosure notice. Also, something to note, pretty much every loan out there now has what's called a due on sale clause. So what that means is or an alienation clause. That means if you sell your home on contract and you've alienated the home, you've left it, the lender can call the note due. Generally speaking, I haven't really seen that happen as long as the lender's getting their money. I just haven't seen them exercise that clause, but you need to be aware of and know that if you're doing seller financing, that clause is probably on the underlying mortgage that the seller has. So just be aware of that. And then again, if you got the cash, that's probably the easiest way to purchase a house. Before you go out and hop in the cars and start driving around, obviously you can drive around, go look at areas and try to find areas you want but before you start making appointments to go in and look at properties, you need to know how much you can buy. There's nothing worse than going and looking at a home, falling in love with it, and then going to the lender and finding out you do not qualify for that home. So the first thing to do, get qualified, get pre-approved, and I can refer you to multiple lenders that are really great at doing pre-approvals and letting you know exactly how much you can qualify for. And sometimes it's also not just about how much you can qualify for. Perhaps you can qualify for more than would actually be good for you to pay. Perhaps you really, to be in a safe position financially, you maybe need to buy less of a home than you can actually qualify for. And a qualified lending officer can help you make that determination. So that is step number one, get pre-approved. Okay, step number two, let's just talk about home searching.
We're searching for a new home.
Back in the day, all the access to homes just had to come through real estate agents. And so I would send people searches. That's how they would find a home. Now it's different. We've got the internet. People can go do all those searches on their own, find their homes. Oftentimes people are just sending me the homes that they like, and I set up the appointments and we go look at them. Now, with that being said, there are some sites that are much better than others. Now, I know that there's some big money behind these big real estate sites that everybody knows their name or rhymes with Willow, or some of those other sites. Yes, you can find homes on there, but they are not always the most accurate and up-to-date information. I've actually gone on there and seen homes that I sold 5-6 years ago being presented as a home that's still available today. So sometimes the data and information is just not up to date. Actually, the best place, in my opinion, to go would be with a realtor's website who's getting their information directly through the local multiple listing service. And they're required to keep the information up to date. So the moment that you sell a house, you've got like 3 days to go in and show that home sold, so that it can't continue to be marketed and shown as something that's available. Any price changes and price adjustments that come up, they have to be notified in the MLS immediately so that people are getting accurate information. So your best accurate information would be to go to a local real estate agent's website, or in our case, the multiple listing service. The main one that we use for the vast majority of the state of Utah is utahrealestate.com. That's actually where I set up a lot of my home searches. Now, one of the things that I can do is, you definitely want to get specific. Now, there's also, fair housing laws. If you want to know exactly which area has the best LDS ward to go to, I'm never going to tell you, because one, I don't know, but that also violates the real estate, fair housing laws. I don't know. Every area is good. Some of that stuff you're going to have to check out on your own, do some background checks in the neighborhoods that you like. But the one thing that you want to do is get specific with the type of house that you would like. With that being said, you can't get too specific. If you get overly specific, the searches won't send you any homes to look at. So you need, if you're saying, I only want homes that have 5 bathrooms in the basement, well, you're never going to find it. So that's a little too narrow. You got to keep it open enough that you can that we can send you some good things, some good homes to give you some options with. So what I'm saying is, it's easier if you narrow it down by city, the style of home, and the price range. And then I can actually set it up such that we do a search that the moment a home comes on the market, you're getting notified. That is absolutely key in some markets, to be able to beat other buyers out to the best listings. Now, there's some highly competitive markets from time to time. If you're not the first one to it, you're not going to get it. So that's a really cool feature where we can put in the parameters, and keep in mind, we can always adjust them. So I always start out kind of big so we can start sending homes to people, but with, if it's not fitting their exact needs, then we can start narrowing the criteria down a little bit to get a little bit better with sending them the types of homes that they want. And the longer and the more I work with you, the more I realize what it is you're really looking for. Sometimes people tell me that, they want one thing, but after we go out and look at homes, I realize that's not exactly what they want. They would really like this, and I can make some adjustments. So we'll make sure that we're sending you every property that you want to see. Now, another thing that's key is, from time to time, just because we're in the real estate business, We have people come to us that are thinking about selling their home, but they haven't put it on the market yet. So we can actually also, or I can actually also help provide opportunities to come in contact with home sellers before they actually even go on the market. That's one of the benefits to working with a real estate agent, is we also know about homes that are off market that people are willing to sell, besides all those that you're going to find on the websites. Do you want to access all the best listings available on the market? Go to www.scottgwalters.com or bestusarealty.com. I'm actually right in the middle of switching over website companies, but those sites should be available by the time this video is live. I'll make sure to leave a link in the description down below. Okay, so now once you've found the homes that you want, then we're going to start setting up searches on these. So generally what I have people do is send me back the MLS number that's at the top of the pages of the listings that I send to them, and I'll call and make appointments with the agents, and we'll go check out those properties. Here's a couple things of caution when it comes to actually doing the walkthrough on the homes. Pretty much everybody nowadays has a camera, so I would keep your comments to a minimum. I know for a fact quite a few sellers who watch buyers walk through their home and listen to their comments. And if you're saying, oh, I love this home, it's the most amazing, we're gonna offer on it, this is how much we have, you've given away all of your leverage for negotiating, because they know exactly what you want, what you're willing to pay. So whenever you're inside the home touring it, just keep your comments real general and keep them real minimum. Once you're outside the home, that's when you go ahead and visit with your agent about the pros and cons of that house, what you like, what you'd be willing to offer. And that's where also I, as an agent, can perhaps point out some things that might affect the value of the home. Perhaps there's some functional or economic obsolescence to the home, things that are, you know, inside or outside that can affect the value of the home. Perhaps I can notice some things that, you know, keep in mind, I'm not a home inspector, but I have helped a lot of people buy homes, so I am able to see some of the things that could affect value. But basically, when you do the walk through the home, save those comments for outside of the house, away from the cameras. Keep in mind, those cameras can even pick up conversations out at the street. So just, you know, you just want to be a little bit further away when you're talking about the homes. But just to give you some tips when you're inside the home, some of the things that you need to look for, want to look for, you're looking for the big stuff. Do you see, is the roof in really bad repair? That's an expensive fix. You could quickly look in the mechanical rooms and see if you can see how new or old the furnace or the AC unit is outside, just to give you an idea whether that might be something that you're going to have to replace that could cost you some money. You know, you could look at if there's cracking in the flooring or maybe in the ceilings. You're looking for the big things. Little stuff, you know, if you've got some carpet that needs to be stretched or things like that, that's not super major that would keep me from offering on a home. Perhaps it's a little dirty or cluttered, or the paint's a little dirty. That's not a big deal. Those aren't the big things to look for, but those are some things to just think about. One of the things I have noticed, this has been my experience, buyers often overestimate the cost of repairs. So if you see something that scares you, don't let that scare you off, because it may not be near as expensive as you think it is. But that's why you definitely want to get a home inspection on a property, and we're going to get into that next. The only thing I've ever asked when I go through the process and help you with all the searches and write up all the contract, I'm just asking for your loyalty. All right, here's the paperwork. Again, there's a lot of paperwork. Here's some of the things that we're going to go over.
Good news! Our offer was accepted.
All right, first thing we're going to go over is the purchase contract. This is a 6-page contract that's been put together by the Division of Real Estate, and this is what all realtors use to make an offer on homes here in the state of Utah. There are a little bit different paperwork for different types of properties like land. The contract I'm holding here is specific for buying a home. Some of the things that are going to be on this that you want to be aware of is, of course, you're going to put in the property that you're making an offer on. The other thing is you're going to decide what the purchase price of the home that you're going to offer. This is where a highly qualified real estate agent is really going to help you and help you save some money. One of the first things they should do when you've come across the home that you really want, they should be running a current value on that home.
Let's start by running a comparative analysis
to see if what the sellers are asking for it is what it's really worth. I had a client once, they looked at homes that were just a block apart. One was $30,000 more than the other. I ran my market evaluation, showed them, look, this one over here, the only difference between the two is 5 years. The model is exactly the same. It's the same square footage. They're both on about the same size of lot, but these guys are trying to get $30,000 more than those guys. And of course, they bought the home that was $30,000 less, saved them quite a bit of money. So you definitely want to make sure that your agent runs the numbers on the homes before you make the offer. The second thing is, how do you make a competitive offer? Well, it also is going to depend upon what kind of market you're in. If it's a seller's market, you don't have as much leverage. You better make the highest, best offer you can. Lots of earnest money, perhaps even considering in some situation if it's going to be a multiple offer thing and making the earnest money non-refundable upon acceptance of your offer. Those are some of the things you can do. If it's a buyer's market, and your agent can help you know if it's a buyer's market or a seller's market, it really depends upon the amount of inventory in a market. It used to be kind of the nationwide stat on that was if there was a 6-month supply of homes, that was just like a balanced market, just enough buyers, just enough sellers. If you had a more than 6-month supply, that meant that it was a buyer's market because there was a lot of inventory for them to choose from. Anything under a 6-month supply was a seller's market. That's when home prices are going up. Sellers can ask what they want. Well, that is also very that also can be very dependent upon local markets that might have a less than 6-month supply of inventory, but based on the amount of buyers in the market or amount of homes, it just, those old rules don't necessarily apply. Right now we have like a less than 3-month supply of homes on the market, but it's actually a buyer's market compared to how many buyers and sellers there are. So with that being said, there's a lot of inventory currently, and it is a buyer's market. Buyers have a little bit more leverage than they used to have with sellers. 5 years ago, back during the pandemic, there was no inventory on the market. Homes were being overbid 100,000, 150,000 over market. People were waiving inspections. It was just an absolutely crazy market. We are not in that right now. In Utah, it's more of a buyer's market. I'd say approaching a balanced market. Just enough buyers, just enough sellers. So knowing that we're really close to a balanced market, there is room probably to do some negotiating. There's still a lot of sellers that think that we're still a seller's market, and they're still holding their prices up there. So that's why do the evaluation, find out what the house is worth, and then make an offer that you're comfortable on. You're probably not going to be dealing with a whole bunch of multiple offer situations. That really limits your options, is when there's just a lot of other offers coming on the table. You don't have time to mess around. If you want the house, make a really good offer. But in this particular case, I would come in, if you're gonna, let's just say you're offering on a $600,000 or $700,000 house. If you come in and you offer an earnest money of $500 down, most sellers are going to be like, they're not very serious. They're going to walk away at the drop of a hat, the first thing that goes wrong. So really, if you want your offer to be competitive, you probably want to be offering $1,500 to $2,000 earnest money at the low end. Now again, we're the expert, you're the boss, so we follow your direction on that, but we'll give you some counsel on what we think will be the best thing to do and help you get your offer accepted. Now, earnest money is just basically saying, hey, I'm really serious about buying your house. That doesn't mean that you're just giving that to the seller, and if you don't, and they automatically get it. No, we're going to put some protections in there. That's all within the contract under the due diligence section, where we're giving you a right, one, to get your financing and your appraisals done.
I'm only the appraiser!
As well as do your review the seller disclosures and do your inspections where you hire a home inspector. Now, I'm always going to recommend that you hire a home inspector. I know you want to use grandpa or dad, and they're fantastic, but they are not home inspectors. Hire a professional.
So home inspection thing's a good idea.
Yeah.
One thing to keep in mind with a professional, their job is to pick out everything they can absolutely find wrong with the house and show it to you. What I caution my buyers on is look for the major stuff. Again, he's going to show you the carpet needs to be stretched. Big deal. That's not a huge repair. If he comes in and says your roof's got to be replaced right now, it's leaking, well, that could be a $15,000 repair. That's something that you need to know in the negotiation. Say you've got the home under contract, well, you might need to come back and negotiate some repairs there. And if they're not willing to do something, then if you meet that deadline and back out of the contract before that due diligence deadline, the date that we put on there, then that $5,000 earnest money you put down comes back to you. So that's the power of having someone who can help you negotiate, make sure that they keep that money protected. Because if you just make it non-refundable up front, you're going to lose that money. The only time I would ever make it non-refundable up front is if you are looking at multiple offer situation. You got 10, 15 other offers. This is one way to set your offer apart from the others, that you'll give them that money upon acceptance. Otherwise, I would never do that. I would always leave that part where you can get your earnest money back after you've looked at their seller disclosures, which is like a 6-7 page disclosure where they've got to tell you everything that they know that works in the house or doesn't work, or things that they fixed, or say they had a flood, how that happened, what they've done to fix it, all that type of stuff. You have a chance to review that and approve those and ask for further clarification or maybe some additional fixes. Then you also have time to do your home inspection, where I've already talked about get a home inspector. I can refer 3 or 4 or 5 home inspectors to you. Now that's an expense that you're going to spend whether you go through with the purchase or not. Most of these home inspectors on a pretty average home, you're going to be around $400 to $500 depending on what you want inspected. It can cost you more if you want additional inspections like a mold inspection or a radon inspection. Things like those are extra money. Now keep in mind the inspector can't do an invasive inspection. He can't cut into the walls and look for mold and things behind that. But a lot of them have infrared cameras that can kind of look behind walls and see if there's some hot spots or moisture spots. So you want to find an inspector that kind of includes some of that stuff standard with their standard cost of a home inspection. I can help guide you through that. So like I said, we want to protect that earnest money. So you've got a right to do the inspection. And then also the last thing really that protects your earnest money is getting the appraisal and the financing. And it's got to be, and the condition on that is the home's got to appraise for what you made an offer for. If it doesn't, you don't want to be stuck having to come up with the difference to pay on that home. So one, we got to make sure the home appraises for what you want.
We should have it appraised.
Or what you offered. And then the 2 is to make sure that the loan terms are acceptable to you. Perhaps you went in and you got pre-approved in the process and you like the payment and everything, but interest rates have gone up in the meantime and now the payment's way higher than you expected. Well, that's not acceptable to you, and you should be able to have the opportunity to back out of the offer and get your earnest money back, as long as that has all been done before your deadline date. So I always work backwards when I make an offer with somebody. On the last page of the purchase contract, that's where you can go in and say, I want to close. Say you've looked at the home on March 1st and you say, I want to close on April 15th. Well, then I work backwards. I'll put April 15th as my closing date. How much time do I think you need to be able to get your appraisal and loan done? Probably a month, maybe 3 weeks. So I'll go back in near the end of March, put a date in there. Well, how long do you need from there, when you get the home under contract, to be able to look at the seller disclosures and do your home inspection? Seller disclosures should be pretty immediate. They should already have those filled out and be able to send those over to you. So I'd probably make 7 days after acceptance to look at those, and probably give you about 14 days to do all the inspections that you have. Now let's say that during the inspection period you find some issues like the roof and all that. You can actually go back and negotiate with the seller. Hey, the roof's got to be repaired. I offered you $850. That's going to cost me $15,000. I've got some estimates on that, so I'm willing to offer you $840 because I got to take care of that problem. And the seller can say yes or no. And there's the negotiations that go on back and forth. So the deal doesn't have to just be over and dead. You've got time to negotiate that. Perhaps you lower the price, or even you ask the seller to get it fixed and use the licensed professional. And I just saw that in my neighborhood around the corner for me. The roof absolutely was horrible, had to be redone. And the seller agreed to do it, redid the roof, and then they closed on the transaction. So that is the offer and purchase process. Let me make sure I'm not missing anything. Okay, yes, we can't talk about making an offer negotiations without talking about home warranties. Home warranties are huge.
Sad.
Oh, that's all right. It's under warranty. It'll be okay.
Again, those are going to be $500 or $600. It's like a insurance policy, so they're not going to cover the cost of everything. Let me give you a couple examples on the home warranty. Basically, they cover the inside of the house, things that might break on the inside. They do not cover anything on the outside. That's all inside stuff. I had one home. This is one that I purchased personally as a flip, lots of years ago. I got a home warranty on that, and the furnace went out.
Because it's still under warranty.
But I had the home warranty. I had to pay my deductible, which was like $75. and they replaced the furnace. And this was during the listing period. It wasn't even after the closing or anything. It was during the listing period, and they fixed that furnace for me. Saved me a lot of money. Now, I had another seller years after that I recommended to them that they order a home warranty up front and be willing to offer that to any buyer that comes through, and that the home warranty covers the home even during the listing period and then goes for a year after the sale of the home, and that gets transferred over to whoever buys the house. Well, she didn't want to spend at that time, I think it was probably about $400 or $500. The home warranties have gotten a little more expensive depending on what you want covered. And she didn't want to do that. It was in the middle of winter and her furnace went out, and it was a particularly expensive furnace, and it cost her $8,000 to get a brand new furnace that could have been covered for $75. So I think home warranties are huge. I'm actually going to negotiate a home warranty in every contract for every buyer. And this has always been my commitment to any buyer that uses me. If a home seller is not willing to pay for that home warranty, I'll buy it for you, or I'll give you credit in closing to be able to buy a home warranty. I believe in them that much. They're huge. You need a home warranty on a house. The main contract is the 6 pages where you cover everything about what you're going to put down on the property, your inspection time periods, all that kind of stuff. If there's anything different that you want, there's extra things you want to ask, there are addenda where you can ask for extra things. Perhaps there's something in the house you really want, or maybe they got a trampoline out in the backyard and you want to ask them to leave the trampoline. You can do all that on addenda. There's just a lot of, this is where you can also ask them to pay for closing costs for you. A lot of times it's pretty typical to ask for a seller to pay 3% of the purchase price to be used towards your closing costs, or a rate buy down, or whatever you want to use that for. So that's all part of what we help you negotiate. We do that all through the addenda. There are so many different addenda that we can use. There's a lot of pre-written addenda. For example, perhaps you have a house that you're having to sell before you purchase the new one, and so you kind of need a flexible settlement date, and because you don't know if you're going to exactly when you're closing on the sale of your house to be able to close on the new home. So that's where a flexible settlement form would come in. One of the other things you need to keep in mind too, there's other paperwork that you're going to need when you make an offer. Perhaps the home was pre-1978. Well, you're going to need to go through the lead-based paint disclosures and know that the home could have lead-based paint, and you have the right to do inspections for that and all that kind of stuff. There's just so much paperwork and so many protections that you need when it comes to buying a house. That's where a very qualified buyer's agent, real estate agent, can help you through the process, especially through the paperwork. There's so much paperwork. And then there's paperwork that you sign with the real estate agent to have them represent you. I'm going to cover that last thing. That's going to be my last point. But that could potentially save you thousands, that contract with the real estate agent. So, another thing I want to cover is when it comes to buying, you do all the paperwork, contract paperwork. There's a lot of fraud going on where people have actually stolen people's earnest money. So when it comes time to go to the closing table, and say you get an email from the lenders or from the title insurance company saying, hey, wire your earnest money here, before you ever do that, because there's wire fraud going on, you better check with your real estate agent and the title company to make sure that information that you got was correct, so that you're not wiring your funds to a fraudster. I've heard of multiple people here in the Utah County area where hackers got a hold of emails, monitored the emails. When it got close to time for closing, sent an email to the buyer saying, here's where you wire your funds to. They wired the funds. It was to the fraudster. Boom, $200,000 gone. They can't close on the house. So there's wire fraud that takes place. And these are the dangers that a competent real estate agent will know about and will be able to warn you about and help keep. And this is one of the areas where they can potentially save you a lot of money and avoid a very costly mistake. Okay, there was one last thing that I did not talk about, or I forgot to talk about when it comes to the whole offer and all that type of process. One of the things that as a buyer's agent we're going to help you with will be the buyer due diligence checklist. This is another 3-page disclosure about all the things that you should check out when it comes to buying a home. These are typically the things that could cause you some issues and cost you money. First thing we want to make sure is the home that you're buying in building code and zoning compliance. Well, what does that mean? Well, is there an addition to the home? Did they get that approved through the city? If they didn't, you might have a hard time getting a loan on that home. And if somehow that sneaks through and you go to sell that home down the road and it was never approved, you might have a hard time reselling that home. So those are all things that we want to check out, make sure that the home was put on the right property. Now that's the importance of having title insurance. I didn't talk about that either. When you buy a home, you're going to have title insurance, which basically just ensures that what you're buying is free and clear of any liens, lawsuits, or judgments. I did have a property once. We actually just did the financing for it. We didn't help them buy it because we did the financing. It was in Nevada. And when he went to sell to move back to Utah, he got a hold of me because I was going to help him buy a new home. But during the sales process and doing the title insurance out there, they found that the builder had actually built their house on two lots. So they was splitting the other person's lot, who was an out-of-state buyer. This was kind of a remote location. Not a lot of people were building in there. The builder built the home on the wrong location. That's why you have title insurance. They helped pay to fix and remedy that situation. So we're going to get title insurance, and that's part of what we talk about in the due diligence section. Is you want to check out title insurance and make sure that the home is free and clear from any lawsuits, judgments. You don't want to inherit someone else's miss. You want to check out whether a home can be, maybe you're wanting to rent this house out. Can you rent it? There's some of the other things on here, you want to check out. Has any hazardous waste or toxic substances ever been stored on the property? That could cost you a lot of money. Does the home have a radon gas problem? Radon gas is a naturally occurring gas that comes up through the ground, usually comes up through the basements. If there's too much of it, you could have the potential of contracting cancer, like lung cancer. I sold a very large home in Mapleton not long ago. They did a radon test on it, and it did test positive, where it was higher than the levels where the EPA recommends that you should do some radon mitigation. If I remember right, it cost about $5,000 to put in a radon mitigation venting system in the basement. So it wasn't a deal killer. It wasn't super expensive. That was a really big home, over 7,000 square feet. If you're a more modest, moderate-sized home, that's probably going to be more like $2,500 to $3,000 for a radon mitigation system. But this is all part of the inspection stuff. You can have an inspector put a radon test kit in the house and test it to make sure that it doesn't have radon. And if it does, then you can negotiate with the seller what to do to get that problem fixed. Surveying and staking is another thing that we always check out when helping people buy a home. Want to make sure that what you're buying is actually it, that your property lines are what they say they are. Now keep in mind, if you're buying a home that's been established and the fence lines have been there forever, that's probably going to dominate. That's probably going to stay. But something you still want to check out. I've talked about home warranty plans. We're a big believer in that. Flood zone insurance. I know this is a big deal in other parts of the country, like in Florida, where they're having a hard time getting insurance, maybe because of being in a flood zone or hurricane zone. So you want to find out, if your home that you're buying is in a flood zone, the insurance could be very expensive on that, making your monthly payment a lot more than you would anticipate. So you want to get that all checked out before you actually close on the home. I talked about title insurance already. You've got homeowners insurance. You want to make sure you can get the homeowners insurance policy on the home. If you got a super really old home, they might not insure it if you got like something like the old knob and tube wiring in the home. So you just want to have all that checked out. Oftentimes you want to know whether the square footage is right. I mean, generally what's being put down there is a courtesy estimate only. So you probably want to have your own appraiser measure and tell you whether the square footage of the home you're buying is what they're telling you it is. In fact, recently I had a home where the owner said it was like 4,000 something square feet, and then they found an old appraisal that shows closer to 3,000 square feet. So you really want to get those things checked out.
We should have it appraised.
That can really affect the value of the home. If you have 1,000 less square feet, the home's worth a lot less. Other things that we can help you check out is utility services, water services. You might want to check out geological conditions. Is there a problem with the land? Is this area prone to having slipping and sliding, where you might have basements that slip? I mean, there's certain areas on the benches in the foothills here in Utah that have that issue, where they do slide down a little bit. Mold's another issue that people worry about. You want to get that checked out. You want to make sure a home's in housing compliance. Maybe somebody's selling a home and saying, hey, I can use this as an Airbnb, and they sell it to you like it's an Airbnb, but the city ordinance is saying no, sir. You want to check that out beforehand. Property taxes, how much your property tax is going to be on this home. All this we'll find out for you before you close. And of course, as always, keep in mind, I am not an accountant, I'm not an attorney, so I can't give you accounting or legal advice, but I can suggest that you go visit with those people if you have any questions on how buying a home is going to affect you, legally or how it might affect you with your accounting and taxes. All that you need to check out with an attorney. Those are just some of the things that we're going to help you check out when it comes to buying a home. This is all part of that offer purchase process when making an offer on a home.
I'm accepting your offer.
All right, it's a happy day. It's closing day. What does that mean? Closing and settlement are actually two different things. When you go to settlement, that's where you're signing everything at a title company. Here in Utah, we use title companies to close. They're the ones that put together all the closing paperwork. That's where you're going to show up to their office, and your agent will be with you, and you're going to sign your life away. You're going to have a stack of papers that thick where you're promising, I'm going to repay the loan on this house. So once you do that, then that paperwork generally goes back to the lender and they review it, and then they'll go ahead and send the funds over that the title company can then use in order to go down to the county and record that the deal is finalized. That's when the house is yours. Now, nowadays there's a lot of lenders that actually do something called table funding, which just means they already have the funds already sent to the title company. So it's right there while you're signing. All you got to do is sign. Title company can go and record, and basically the home's yours already. Now, when you get the house, that's what everyone wants to know. When can I get in the house? One of the things you need to understand is when you write up that purchase offer, you're going to put in a possession period. So generally most people are going to give the seller a day or two to be able to move out of the house, because oftentimes the sellers, they're not going to let you prepossess the home. In other words, they need to know that you've funded and that they've got their money before they're letting you to start moving into the house. And so that, that can take a day after you sign. Usually the funds and all that and recording happens about a day after you go sign. Sometimes it happens the day of if you sign early in the morning, but generally speaking, it happens the day after, and it can take even 2 or 3 days after that sometimes. So once it actually records with the title, that's when the clock starts ticking on the timeline. Say you gave them 2 days. That's when the clock starts ticking for them to have the 2 days to get out of the house. If the home's vacant, then oftentimes upon closing is when you will get the keys. And at the closing table, your agent should have keys there for you to be able to get in the house. But if it's one of those other options where it's, a couple days after closing, then the agent generally can meet you at the house, get the keys, hand it to you. And oftentimes the sellers have, left the garage remotes inside the house. So that's what it looks like with settlement or with closing. You're actually going to show up to that closing table. Now, one word of caution, I kind of mentioned this a little bit earlier. There is wire fraud going on. Wire fraud. You want to make sure, double check that where you're wiring those funds are actually going to your title company. Oftentimes people send wire their down payment funds to the title company, and then there's fraudsters that monitor your emails and then send you a fake email like it's coming from the title company. And then people have actually wired their money to a fraudster, and that money's gone. We don't ever want that to happen to you, and that's where a competent agent and a competent title company can save you. One, you're always going to double check and call your agent and the title company first to verify that the email that you got and the wire instructions you got are from the right people. Just a word of caution there. I've heard of people losing a lot of money, and then of course they can't close if that money's not there. Oh, one thing I should mention, just before you go to closing, you do actually have the opportunity to do what's called a final walkthrough, where you get to go through the house again. Keep in mind, this is not a time and place for you to find more inspection items for the seller to complete. This is a place for you to verify that the seller has completed the inspection items and the repair items that you already negotiated. And then if they haven't completed them like they're supposed to, then there could be issues. But otherwise, it's a chance for you to walk through and check it out, make sure everything still looks pretty good. This is oftentimes where people bring their family. They bring mom and dad, grandma and grandpa to come see the beautiful new home that they're buying. After the final walkthrough, and I've had people do the final walkthrough before actually going to the closing table, like just an hour beforehand, and then go to the closing table. The title officer will go over all the different papers with you so that you understand them. You'll sign them. Then once the funds are received, then they will record that closing at the title. That's when the house is yours. And shortly thereafter, you can move in and start your new life in your dream home. All right, I'm going to share with you one story about a time where I went to a closing table and it did not close. So this is just a word of caution, because everyone gets real excited about closing and moving on and moving out. This time I was representing the seller, and we were at the closing table, and I hadn't heard from the buyer's agent for a while. It made me kind of nervous. When you don't hear from the buyer's agent, it gets you just something my old timer senses got up, and I knew something was up because she just wasn't communicating with me like she should. Anyway, we get to closing table. I get a phone call because she knew that we were going to closing. I'd let her know. I'd text her, said, we're going to closing. She called me during the closing and went out and said, my seller or my buyer didn't get their loan. They were turned down.
Denied.
Let's not forget that we didn't even get the loan.
They're a newlywed couple. He was just getting the loan in his name, which I knew, but he bought a honeymoon package on his credit card so they could go honeymoon. Well, right before closing, oftentimes lenders will check a borrower's credit again to make sure they have not opened up new lines of credit, because if they do, they could not qualify for the loan anymore if they're really close on their debt to income ratio. I kept everyone from panicking. It was a new agent on the other side. She was freaked out, and I just said, hey, what do we need to do? Let's talk to the lender. What are some of our options? What we learned was that we could add the new spouse onto the loan. It was going to take about a month, but if we went through that process with their combined income, they could qualify for this home. So ultimately, we were able to save the deal, but it did cost us a month of time. But in the beginning, that buyer was not able to close because of making that mistake. That's why it's so important to work with, one, a competent real estate agent that's been through this process before, and two, a really good lender that makes sure that you know what you're doing when it comes to getting your loan. That really good lender is going to keep you from making silly mistakes like that. They're going to educate you right up front that you don't go open new lines of credit while you're in that loan qualifying or loan process. They're going to tell you, don't go buy a new car, don't go to the furniture store and put some new furniture on credit. Wait until that loan is funded and closed before you do any of that. Because the underwriter is most likely going to check your credit right at that closing table and make sure you have an open lines of credit. You do not want a closing table surprise like what these people had. I have several good lenders that I can refer to. I definitely have my favorite. If you want to know who they are, then reach out to me, give me a call, shoot me a text, send me an email. I'd absolutely love to send those referrals over to you. Okay, now before you've even ever started the process, nowadays because of the new National Association Realtors settlement, before a real estate agent can even show you a property, we have to have a signed representation agreement with you. But I have found over the years that the number one fear that most buyers and sellers have is getting stuck in a long-term contract with an agent, whether it's a listing agent or buying agent, that they can't get out of and they're stuck with for 6 months or a year. My commitment to you is my sold by service guarantee. I have offered this for more than 20 years, and that is, if you don't like me, you can fire me.
You're fired, 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 fired.
So here's the buyer representation agreement right here, and this is a legally binding contract. Once you sign this with a buyer's agent, you are obligated to work with that buyer's agent unless they use one of the other non-exclusive contracts, and maybe they've only made you sign a contract for one house type of a thing. On here, this is where they're going to negotiate what their compensation is. And that's where it could really cost you a lot of money if you have some agent that tries to lock you up and they want to make, X amount of dollars, but you're only wanting to pay this, but you signed it when they put this X amount up here. That's what you're going to be obligated to pay them when you go to closing. I'm always negotiable on this. I'm flexible on this. I want to help people own homes. I've never been that type of agent that is, if I don't get this money up here, I'm not working with you. I'm going to hold you to it. I've never been that. This is what I do. I negotiate with the seller on your behalf, and I ask the seller to pay my commission for you so that you're not having to come out of pocket with that. And then generally, I will accept whatever it is I'm able to negotiate with the seller to pay me. I feel like if I'm not good enough to negotiate my contract with that seller, then I don't deserve a commission. So that is my sold by service guarantee to you. Is I'm going to negotiate the seller to pay my fee on your behalf. And two, if you don't like me, then you can fire me.
You're fired.
You're fired.
You're fired.
Well, okay, thanks for watching this video about the buying process of properties here in Utah. If you have questions about a home that you're looking at now or any other home in Utah, don't hesitate to reach out to me. Give me a call, shoot me a text, send me an email. I'd absolutely love to help you. Don't forget to like, subscribe, tap on that notification bell so you can stay current every time I drop another video about living in Utah and buying real estate in Utah. If you found this video helpful, please share it with someone else who's looking to buy a home in Utah. This video could literally save them thousands of dollars. And again, if you like this video, might enjoy my video about the things they don't tell you about moving to Utah, and you can watch that video by clicking on somewhere up here. And with that, we will see you on the next video.